Good morning, ladies and gentlemen, and welcome to the show on this Monday, the 11th of October, 2021. Thank you for tuning in. Glad to have you guys here. Now, I'll tell you what. I liken this whole system right now to like a giant redwood tree, and I've told you guys they're cutting the tree down. You can hear the roots, not the roots, but the wood inside the stump starting to snap. And if you guys are familiar with cutting down trees, you hear those snapping sounds. That means the tree has started to move, starting to fall. Sometimes it can take a big tree a long time to fall, months, because this system is so big. But it's in the process of starting to collapse. Collapse of the entire world's financial system. And it looks to me like this thing that's unfolding with China and Evergrande, it's going to continue, and it's going to get a lot worse. It's contagion spreading within the system. Now, let's open up the charts right here and take a look at what's going on. This is a big corporation. I know a lot of you guys probably haven't heard of it before. It's KKR, and they have the big chiefs, the big cheeses that run this corporation are Henry Kravis and George Roberts. It says Henry Kravitz and George Roberts are private equity titans who founded KKR with Jerome Kohlberg Jr. in 1976 are handing over the keys. They've defined that the 1980s leveraged buyout boom with the firm's acquisition of Nabisco. What are they worth? The private equity firm, says right here, has about $430 billion in assets under management. So we're talking about this is big, $430 billion. That's bigger than what Evergrande owes. Evergrande owes $305 billion. So it's $430 billion, almost getting up near half of $1 trillion. Okay, I'll tell you what I think's going on. This is just my personal opinion only. I think these guys see the system toppling, and I think they're heading for the hills. Out ahead of it before that redwood comes down. That's what I think's going on, personally. It's just my opinion. Let's get in there now and take a look now at what's going on in the markets today. We got cryptocurrencies. Actually, I got the order of these wrong. Let me just switch the order around here. We're going to do gold and silver first. We always do, not cryptos. The silver price is up 8 cents on the day so far. It's just taking a jump in the past few minutes. It's at 22.74. I'll tell you what's happened. Inflation has moved up on everything so suddenly. It's left gold and silver in the dust. Gold and silver are having the prices has not been affected because of the gold and silver price manipulation by the four big banks. How they accomplish this is they create derivatives products. And the derivatives product actually determines the price of the real physical silver. And they can create as many of these derivatives products as they want. And so when you have more of something, it makes prices go down. And so it makes it look like there's more silver than what there actually is. To the tune of about 400 times as much as the actual amount of real silver. So it looks on paper like there's 400 times more silver in the world than there actually is. And because there's a lot of something, of course, it keeps the price down. And this is how they do it. By trading these paper derivatives products. But the people that own these paper derivatives products have a claim on the real metal. So for every ounce of silver out there, there's 400 people out there who think they own an ounce of silver, and all they own is a piece of paper. It says you own an ounce of silver. They've been doing this for a long time, and they're still doing it, and they're still keeping the price of silver and gold down below the price of everything else moving up. This makes it a fantastic buying opportunity because in real truth, there's only so much real physical silver out there. But I'm going to tell you guys, do not buy these paper products. Buy the real physical metal. Because when this thing comes down, all these people who own these paper silver products are going to think they own the real thing, aren't going to own nothing but air. It's going to be like a game of musical chairs, you know, and the only ones that are really going to own silver is the ones who actually have the physical product in their hand. And that's what you need to do. And it also helps bring down these paper traders. They've been keeping up with the supply of silver. I don't know where they've been getting the silver to do so, but I'm going to tell you guys, it's just like anything. If it runs out, it's going to run out all of a sudden, like bang, it's gone. And we must be right on the edge of that happening, awfully close. So silver is, I call it the Achilles heel of the world's financial system. Let's take a look at gold. Gold today is it's up 20 cents, which is almost nothing. 1757.30. Now let's move on and take a look at cryptocurrencies today. Is at 2.3 trillion, I should say, 2.3 trillion. And we're looking at a Bitcoin price of 56,242. And it looks like the Bitcoin itself is maintaining over $1 trillion in the industry of the market capital. 1,068 billion right now for Bitcoin. So Bitcoin's become a $1 trillion industry. Imagine that. Something that was like deemed almost worthless there back in 2009. I mean, that guy that sold 7,000 Bitcoins to get a pizza, he thought he got a good deal. That's amazing. Let's take a look now at the Dow Jones Industrial Average, which is basically flat with the board. It's 34,745 right now. And we're going to take a look at something here. This is a Manarino. Now, this is Gregory Manarino's site. It's traderschoice.net. He's got great information over there, and he gives a market indicator, and this is his risk indicator today is 94.4, which means it's still in the green, but just barely. If it steps over 100, it's starting to get into the moderate, and it turns to yellow. Excellent indicator. Let's move on here, and let's take a look at crude oil. Crude oil today is at 81.04 today, and it's up 1.69%. I mean 2.13%. It's up $1.69. Now Greg says that he thinks that crude's going to have just a little tiny pullback here, possibly. Over at traderschoice.net, he thinks it might have just a tiny pullback. Well, it's went up an awful long way very quickly, so I would tend to think that it could have a little pullback, but in the long run, he thinks it's probably gonna go up. Anyway, I think that I'm kind of in line with his way of thinking. I think it is maybe due for a little bit of a pullback. Nothing goes up in a straight line forever. We do see pullbacks from time to time if something goes up a little bit too fast. So here we are at 81.04, which is getting awfully high, you know, but ultimately I see crude oil heading from 80 to 90 again here, you know. But, you know, the system is shaken. It's stuttering from what's happening over in China is going to escalate. And as that escalates, as Evergrande starts to grow into a bigger situation, starts to make its way into the Chinese real estate market, when that starts to happen, then we could see a very bearish effect come across all the markets of the world. Of course, you know the Fed, they're out there to buy everything. They're buying the world, is what they're doing, with a printing press. The Fed and the other central banks that are working in conjunction with the Fed, they're not going to let everything completely collapse. They'll try to print their way out of it. So when real estate market starts to turn downwards because of this situation with real estate developers over there in China, and prices of properties in China start to fall, and that contagion spreads to the Western financial system, the central banks are going to go into high gear, high print mode. That's when we're really going to see the inflation. So a little bit of deflation is what's going to trigger the even bigger inflation. I know that's hard to get your head around, thinking that deflation can trigger inflation. But it only does so because the central banks are in that position. Okay, let's move on. We're going to take a look at the MOVE index today. Is it 59.65? And the MOVE index has actually gone up just a little bit, but it's been hovering lately around 60. Got to keep our eye on this MOVE index because this is an indicator of the stability in the credit markets. If this gets too high, it'll trigger the Fed. Probably trigger the Fed if it went over 100. But it can shoot up to 100 overnight if something happens within the financial system, like, say, contagion from Evergrande. Let's take a look now at bonds and rates. And what we're looking at with bonds and rates is we're looking at these bond yields rising. And you know, it's fairly substantial today. It's been substantial over the last few weeks, you know. These bond yields have been slowly rising up higher. We're looking at a US 30-year at 2.16. It's up 3 basis points today. And the 10-year is at 1.61. It's up over 4 basis points today. This is going to have a negative effect upon the markets if these rise much higher. As that US 10-year, which is what they base all debt on, rises up toward 2%, it starts to put pressure on the markets to go down. You know? And we're seeing it rising. And, you know, these yields where they want to go. The US 10-year right now should be over 5%. It really, to be honest about it, with concerning amount of inflation we have, 1970s style inflation, we had a 10-year that was up like 15%. So the US 10-year to be really positioned so that people could actually make money off of lending their money out. Right now, the US 10-year would have to be in higher than 15%, because that would yield a yield over the price of consumer inflation to make money. In other words, people don't want to lend their money out and not make money. That's the whole point of lending money, is to make money. And right now, at the US 10-year at 1.6%, inflation's way higher. You're losing money. It's a guaranteed loss. So who's going to buy this crap? Well, yields will continue to rise. The Fed's going to have to do something about it. The Fed's going to have to buy this crap. And they will at a certain point. Because you cannot have the yields rise too high. It's untenable within the financial system. But they do have a little bit of room they can play right now. They can play with the 2% on the US 10-year. Maybe even 2.25. So they got a little bit of room here. They can let it rise a few basis points. But if it starts to get out of control, they'll have to do something about it. They'll have to buy all this crap themselves. Simple as that. Okay, let's take a look now at the dollar index, which is at 94.12. And the dollar index, I would say, looking at the chart here, I'd say it's going up just ever so slightly today. But we got a lot of volatility in the dollar index today. It's taking these huge bounces up and down. Overall, it has went up a little bit, as you can see in the chart. But I could almost say it's going along sideways today. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.